You've asked what I'm invested in again and again and again. So as a 33-year-old with $500,000 invested and on track to being work optional at 45, here's exactly what I'm invested in my Roth IRA. The first thing is that I have two Roth IRAs. There's really no benefit to having multiple. I still can only contribute $7,500 across the two of them. Across the two, I have $122,000 invested. I personally put in $62,000, but the account has now grown to double that, which is crazy. And all of that would be tax-free in retirement. My stocks, bonds, and cash split is about 92% stocks, 7% bonds, and 1% cash. And I'm 33 and I don't plan to touch this for another 20 plus years, so I mostly want it in stocks. In fact, the rule of 120 says that you should subtract your age from 120 to get the percentage of stocks that you should have. So for me at 33, that would be 120 minus 33 is 87. So ideally I would have about 87% stocks and 13% bonds, but I want to be a little bit more aggressive than that, so that's why I'm at 92% stocks. Of the stocks, I'm about 60% US and about 40% international. But let's talk specifics. In my Vanguard Roth IRA, I have one holding or investment, and that's the Vanguard 2060 Target Date Retirement Fund. And that's what my mom put me in 12 years ago when I was 21, and that's what I still have today. And so that's about 80% of my $122,000 invested. Now, my other Roth IRA is through my financial advisor, and that has a completely opposite energy. I have 9 holdings or investments over there, 8 of which are low-cost index funds, and 1 is a medium-cost index fund. And then I have a little spot to hold cash from dividends and such. The 3 biggest are VEA, which is Developed International, VTI, which is the whole US stock market in one ticker, and then Qual, which kind of leans towards higher quality US companies. And then I have a mix of value, growth, emerging markets, and mid caps to round out that portfolio. So should you go out and replicate these exact investments? Probably not. I'm a 33-year-old with $500,000 invested and on track to being work optional at age 45 while living with my parents. And so if you are not a 33-year-old with $500,000 invested and on track to being work optional at age 45 while living with your parents, then this portfolio is not for you. And I say all that because personal finance really is personal. And so your portfolio and investments should match your goals, your time horizon, and your risk tolerance, or how well you sleep at night when the market is crashing. In future videos, I'll be comparing my financial advisor's Roth IRA versus my Vanguard self-directed Roth IRA, as well as comparing my target date fund versus if I had invested in VOO. So follow for more.